I'm Darius McDermott from Fund Caliber, and I'm delighted to be joined by Richard Kaye, who is the fund manager on the Comgest Growth Japan Fund. So it's good morning from me, and I believe good evening to you in Tokyo, Richard.
Good evening, good morning, Darius.
So let's talk Japan equities. Inflation is a global topic. And I think when we spoke last with you, we talked about rising inflation and what it means for Japan, and that you thought that Japan would rebound with inflation. Here we are now in April, and inflation is certainly rife in the UK and the States. What's it like, and what impact do you think it's having on Japanese equities?
Thank you very much for the question, Darius. We have a little bit of inflation in Japan. But it's a very different story from what you have in the UK and what we see in other economies. The latest Bank of Japan estimate for inflation is about 1.3%. I bet you would tell us for the days when the UK had 1.3% inflation. I know that people who are struggling with their monthly pay package would love to have 1.3% inflation. Because the living cost, I think, in the UK and Western economies has risen. Japan does not really have that. Of course, we have global supply chain effects. We buy oil, lumber, freight capacity from the same places everywhere else. But the endemic inherent inflation propensity of Japanese economy remains very weak. We have an aging population that doesn't buy houses and cars. The economy is normalizing, rebounding anyway, really, thanks to the post-pandemic effects and the fact that the market has really, the shops, the restaurants have really reopened in the last few quarters. But inflation per se is somewhat limited.
Yeah. And just sticking with Japan equities as an area of focus, I mean, 2021 was a difficult area for Asian markets generally, and Japan no exception. Why Japan now?
Exactly as you say, last year was difficult, and in fact, we had the lowest trading volume on the Tokyo Stock Exchange for 22 years last year. Because foreign investors were somewhat getting out of the markets, and they didn't get back in before the end of the year. That is also a reason why now. That is also a reason why Japan must be looked at, because it remains a major market with enormously strong global companies. And because of that exit of foreign money, those stocks are inexpensive. So if I look at our own portfolio, we are at one of the lowest price earnings ratios for the fund during the 14 years that we've run it. Some specific stocks, the story is even more extreme than that. So that's why Japan, because you can buy great companies in a rebounding economy at unprecedentedly low valuations.
That's interesting. Are you seeing the return of some of that capital, that foreign capital? Is that starting to come back into the market?
As a matter of fact, we are, Darius, in the month of March, we had quite strong flows into our own strategy. I'm very grateful to say, and across the overall market, the Tokyo Stock Exchange figures for weekly trade volume show a very strong rebound by foreigners, really, again, from the end of March, continuing into April, after a pretty boring sort of January, February picture from them. So yes, there is a rebound. We see it anecdotally. We see it across the market.
Really interesting. Another sector that I often talk with Japanese managers about is tourism. And let's dig into one of your stocks in the fund, which is Oriental Land, which owns and operates the Disney Tokyo Resort. Are you seeing and expecting a big pickup in tourism, and maybe just touch on that stock a little bit as a reopening type trade in Japan?
Yes, it's a major theme, Darius, and we have about 6 or 7 companies in the fund really which will benefit from the recovery of tourism and normal retail traffic. But the one that you mentioned, Oriental Land Corporation or Tokyo Disneyland, is probably the biggest beneficiary. And yes, that story is happening right now. My daughter went to Disneyland, actually Disney Sea. They have 2 separate parks, Disney Sea, with her friends 2 weeks ago for the first time since 2020 February. She'd wanted to go before, but she couldn't get in because you have to buy tickets online because of entry restrictions, and she finally got to go in. Many people are like my daughter. The company actually gives us figures on the rejection ratio, and it's enormous. Many people are still trying to get in, but they can't. But Disneyland is gradually raising the entry numbers, and because of the removal of pandemic restrictions generally, that raising of restrictions is very easy. Oriental Land, in fact, reported earnings figures not long ago, and the figures were already close to pre-pandemic levels. Even though visitor numbers were down, the visitors that go spend more. And my daughter, I can sadly affirm, is one of those who's spending more. So this company is going to do, we think, really very well as traffic normalizes. In addition to that, it's expanding the park space by about 30%, sticking a lot of new rides. And we see a very fruitful coming few years for that company's earnings in Japan.
And again, just expanding on that pre-pandemic, I think there was a lot of inter-Asian tourism, which Japan benefited from, particularly from China. Do you see that sort of accelerating across the rest of the year and maybe into next?
It's the last piece of the puzzle. Everything else in Japan has reopened with surprising speed, really from the end of March when the government ended the sort of emergency declaration, and restaurants had no more restrictions on their operating hours or serving alcohol or anything like that. Tokyo Disneyland could remove a lot of its entry restrictions and so on. But the tourism from overseas is the one puzzle piece that remains. But there too, we're seeing dramatic change. I think as recently as 3 weeks ago, foreigners could not enter the Kingdom of Japan unless you were a resident. Now they can if they have a business reason or a family reason. That itself is a dramatic transformation versus the last 2 years. And yes, we think that normal tourism, probably with some restrictions, maybe people have to be in groups or something like this, will be liberalized surprisingly quickly.
Thank you, Richard. And let's just talk a little bit about ESG. I'm aware that the fund reports both its carbon footprint and environmental footprint on the fact sheet each month. Is ESG a significant part of the process and the way you operate on this fund?
It is, and ESG is really the warp and woof of what we do at Comgest and what we do in this fund for Japan at Comgest specifically. And the reason we say that is that on the process side, ESG hits our work from day one. We have screenings that are based on ESG criteria for the stocks that we want to look at. We have an ESG template report that we have to fill out on companies that we are researching, and then ESG continues again on the process side, even after we bought a company and we engage with the company regularly. But more importantly, ESG is our thinking. Because we've always been people who want to invest in sustainable and replicable stories. We want to invest in companies that really are excited about what they do and how they can help society and the world. And that's all ESG is. And so the process that we described fits in very naturally with the spirit of the investing that we've done at Comgest really since inception. And the Japan Fund actually offers many opportunities like that with companies that speak our language.
Richard, thank you very much for your time this evening in Tokyo and this morning here in London. If you would like to receive more information on the Comgest Growth Japan Fund, please do visit fundcaliber.com.